Hi, and thanks for stopping by. I'm Larry Weinstein, and I'm both a CPA and the founder of SolveMyTaxProblems.com. And in today's video, I wanted to answer the question, is there a downside to filing for a collection due process hearing? And we file for a collection due process hearing, also known as a CDP hearing, using Form 12153. So is there a downside to filing for a collection due process hearing? Generally speaking, it's a good idea to file for a collection due process hearing if the final notice of intent to levy, also known as the letter 1058, has been filed. The advantages, of course, are that it stalls out collection activity. Probably the only downside to filing for a collection due process hearing is it stalls out the IRS's ability to do anything. The collection activity has to stop. So what that really means is while tax has been assessed, there's a time frame running. The IRS only has 10 years from the date the tax is assessed to collect that money. Now, that time frame can actually be extended out. If you file bankruptcy, the IRS cannot collect that money, so therefore the statute is stalled, but the time that it's in bankruptcy is actually added on to the end of the statute, which is actually pretty fair since they couldn't collect the money during the time period. It's added on to the end. When you file for a collection due process hearing, likewise, the IRS cannot collect any money during the time in which the collection due process hearing has not happened. So because they can't collect the money during that time, they add on that time to the end of the statute, the 10-year statute. Here's the downside. If you're within a month or 2 or 3 or 6 months from the tax falling off because of the 10-year statute, and you file for a collection due process hearing, that's actually going to stall out the statute. And it might have been a situation where if you didn't file for the collection due process hearing, the statute will continue to run for the additional 1, 2, 3, 6 months, whatever it is, and then the tax will drop off and you'll no longer be held responsible for it. Therefore, before you file for a collection due process hearing, always be aware and cognizant of where you are in the 10-year statute. If you're bumping up against the 10-year statute, if the 10-year statute of limitations is getting ready to expire, then if at all possible, don't file for a CDP hearing request, because that will make the statute go longer and it might mess you up. It might have made tax that was getting ready to fall off, it might make it still on the books as far as the IRS is concerned. So that's it for today's video where I discussed, are there any downsides to filing for a CDP hearing? Thanks for stopping by and hope to hear from you soon.